The 2024 elections are finally done, and they came up with a lot of twist and turn, but finally the results were as expected. The BJP did end up forming a government, but with a catch that this is not a majority government by the BJP but an NDA government, which is a coalition. So obviously market participants are worried on how that would impact the broader economics and the market. So in this video, we'll dig deep into how the sector rotations are going to happen after this post-election, where do we invest after this event, and what will be the broader implication. The first thing to understand is the coalition dynamics, right? This is not a one-party government. There are multiple parties in place which will be contributing to the policies. The BJP being the single largest party, we do expect the same policies as the last government to continue, but because there are multiple parties, there would be some friction in how the policies go through. Second thing to notice would be that the BJP has had a decline in the number of seats, possibly because of the rural issues. The rural segment in India has been struggling since COVID, and the government's focus on infrastructure spending more than welfare would have made the rural public a little bit dissatisfied with the government policies. So what we see is in the new government, there could be more focus on welfare, more focus on rural spending. So there would be a shift in policy in that direction. So let's talk about the macroeconomic issues one by one. So the first thing to look at would be the rural issues. The BJP lost 63 seats in this election, and the majority of them were lost in UP, which has a predominantly rural as well as agricultural population. So it seems like that the rural segment is not happy with the government. Therefore, the focus has to shift towards the welfare issues or the rural issues. We might see in the next budget that might come in the next 1 month, the spending to shift from direct government capex to some tilt towards the welfare side. The good part is that the RBI dividend came better than expected. The RBI gave back $2.1 trillion to the government, 1 trillion more than the budget. The government could prioritize that money to go into welfare spending without impacting the fiscal balance by a lot. Now, the second key point to notice here would be that the new government could face frictions in how they come out with reforms. There are multiple parties involved. Certain key reforms that the BJP government wanted to come up with might see some frictions. There is number one, the electricity reforms. The government wanted to pass on the benefit of the subsidies to the consumers. They wanted to remove the dependency on the discoms, privatize the power segment, but now that they have multiple counterparties, dependence on the state legislative power, they definitely might see some friction there. Now, the second key thing where the government might face resistance is the GST reforms. For GST reforms, the government is dependent on the state legislature, and for the key reforms that they want to bring in for fuel as well as liquor, the states might in fact have some resistance. Now, the third thing which is extremely important for the market participants is the focus by the government on the manufacturing and infrastructure segment. This government has done a lot of focus on the EV manufacturing, semiconductors, metals, and all of the new age manufacturing segment to contribute more in India's development. We have seen the electronic manufacturing especially do really well, but other segments have not seen that boost. So we do expect that focus to definitely continue going forward into the next government. Obviously, when we are talking about 2024 elections, we cannot help talking about what happened during the election day. I think a lot of expectations that were being built by the market participants were really bullish about the BJP getting more than 350 points as discussed in the exit polls. As that did not happen, the exit poll day went up totally different direction in comparison to the result day. And that has brought on a little bit of a fear about a bear market or about the trends not continuing. So we will dig deep on where the market trends will go in the next few years in the next section. So when we talk about the market trends, there are few forces that we have to understand. Number one, this would be a stable government with what we have, what we can see right now, and that will lead to policy continuance. Second thing is India's growth and GDP continue to be extremely strong, that the numbers that came out recently were really attractive, and that will continue to get foreign investors in. We've seen a lot of government investment happen in the economy over the last few years. I think very soon the private sector will reciprocate, especially in the manufacturing segment, in the EV segment, as well as the manufacturing and infrastructure space. Private capex rising could be one big trend that could define the resurgence of the Indian economy in the next few years. Talking about the market, I think the valuations that we are seeing in the market are still attractive. We are still very attracted to the global market as an economy, and the valuations are not extremely expensive. If you compare the valuations of the large caps versus small and mid caps, I think large caps are definitely at an advantage, and we could see large caps continue to do well in the future as well. In terms of earning growth, last quarter, the universe of stocks that we tracked actually outperformed their earning expectations by 3%. So in terms of earning growth also, corporate India is doing well. So the growth path for the Indian economy is definitely positive. Now let's talk about the interesting part, which is where do we invest after the elections, right? So the first thing that you might be hearing a lot of analysts and investors talk about is that they're tilting their portfolios towards defensives in comparison to the cyclical stocks. What that means is people are buying FMCG and consumer stocks more in comparison to, let's say, the infrastructure segment. If you are tracking the market and you have looked at the PSU, the defense and the railway stocks growth, we definitely are a little bit overpriced right now. So while the path ahead for these stocks is positive, right? They are going to get investments and grow. The valuations at the current moment might be a little expensive. But the FMCG segment definitely is going to be the sector to watch in the current quarter. And that's not just because of the elections, but if you historically look at the pattern of FMCG segment, you would see that it tends to do the strongest in the Q2 of the financial year. The FMCG segment has always been positive during the Q2 of the financial year. FMCG segment has done positively in 14 out of last 16 Q2 seasons, and the average return during a Q2 season has been 5.2%. Seasonally, probably because of the monsoon season and the resurgence of the rural demand, FMCG tends to do quite strong in Q2. So FMCG stocks, consumption stocks definitely have to be in your radar, and especially in this election season because the tilt could happen toward the welfare segment. The second sector where you could bet on is the banking segment. Banks are the most attractive segment financially during this earnings season. The banks have had the highest profit growth rate, and their profit growth to market capitalization is very attractive. We know that the government policies will be in favor of the banks. While the banks are fundamentally attractive, they have not seen that price performance. While banks are fundamentally strong, the price performance still hasn't come up. And we expect that price performance to come up in the next phase after the elections. Finally, like I said, the manufacturing infrastructure segment continues to be attractive. This government in its future 5 years is going to have a strong focus on infrastructure spending on the manufacturing segment. But right now, at the present moment, you definitely have to be careful about the valuations. There could be some valuation pressure on these stocks. And finally, talking about valuations, we have to be careful about the small and mid cap segment in the next few quarters. You have to become a little defensive. The bullishness that we've seen in the last few years might be moderated at least for a short while. You have to be careful for the valuation of the small and mid segments. You have to be careful and look at the stocks that you're picking fundamentally, not just by the exuberance. So in conclusion, the 2024 election ended up being extremely eventful. It disappointed a few people, but it also led to a change of mandate that a lot of people were looking at. And it is a true representation of the democracy that is the Indian democracy. There will be shifts in our investment focus. But the crux of the matter is that the Indian economy continues to be strong. Foreign investors are bullish on India. We are seeing strong growth. Our earnings are strong, as well as the valuations are not that expensive. The domestic investors continue to be bullish, and this is what we have seen in the amount of buying that we've seen in our small cases during the correction in the election time. To be honest, I'm so thankful for everybody who trusts our strategies and jumped into the market during the correction that we saw on the election day. And obviously, you have gained your returns by investing at a bottom. So this election definitely would end up being a long-term positive for the market. We expect some shifts to definitely happen, some welfare spending, resurgence in consumption. The infrastructure segment would continue to stay strong, manufacturing would stay strong, but we could see some checks on valuation. and the future government would be more democratic, a more coalition government, and we could see some shifts happening in the policy framework as well. So that was our quick analysis on the 2024 elections. Obviously, the government hasn't been formed yet. The result seems to be pretty clear, and the policy framework that we see would have some impact on the market as well. So I hope this analysis helped you understand how you can change your allocation after the elections and where to invest. If you like this video, please do hit the like button, subscribe to our channel and share it across with all of your friends. Do let us know what topics you would like us to cover in the next videos. We'll see you in the next week. Until then, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.